Hello, hello, and welcome to Losers Become Winners for August 27th. Alphas hang on to XLV at 17%. Let's go look at that chart. There it is, our 17% for XLV. 23 more percent will qualify for a 30% ROI, last bar low for the out, because we are in the calls. And that is, we're looking for any. So the only exits allowable is the 30% take profit above or the closes below the 30-day moving average for the exit for the alphas here at XLV. That second in command is XLE. Now remember, this is our tug of war, and the tug of war continues. Let me zoom in here, and there we are. And you can see here we have a great tug of war going on. The the Tigers are barely holding on. We have a doji, we have down. Now the advantage is to the alphas because we are in the downtrend, but the Tigers have a chance to bounce right back out because they are here in the stochastic turnaround zone. Remember, I mentioned this before. If you are in a call and it's going into this zone and it's not looking good for you, you might consider an exit rule that you wish to create, saying last bar low, last bar high of the last candle, or the hipper dipper, or whatever you can see on the chart. I am going to quote from Mr. Mark Hochnacker, who says on Rockwell Trading, trade what you see, not what you think. Now, guess what? That's not original. I heard that before many years ago in trade school, way back in 2013. January 2013 was my official first trade school that I attended after being in stock trading for about almost ooh, 12 years prior to that. Yeah, I was trading in the dot com. Yes, ladies and gentlemen, I go back to the dot com crash and even further back then. So, anyway, moving on. Showing my age there, ain't I, guys? Sorry. Okay, so there we are. We have a tug of war, and we'll just wait it out for to see who's going to win it out. One of these two is going to win, and that takes us now over to XCVX. So at CVX is right here. And remember, we have to step through all the 30 days because we have to make sure that the close has not gone into the warning track zone. And this is now going into a little bit of slide action, but everything is still going in the right direction. Okay, that takes us to CVS. Now CVS is right there. There's CVS, and we are right here. There it is, CVS. And now we are a put. This is danger. So look, price is heading toward our danger zone. If it if it closes here or above, we'll be looking for a last bar high exit because we are in the puts. All right, that takes us now over to RTX. RTX is right here at the Raytheon. Oh, perfect setup. Oh, that was wonderful. I wish all my chart changes would be like that. So there is Raytheon, and Raytheon is a put, and the high tested through the 30-day moving average, but did not close above the 30-day moving average. And the MACD is a little shallow, but we still have some nice drop action here on the stochastic, and there's some leveling here on the RSI. Okay, that takes us over to Walgreen, the last and final for the alphas, and this is almost essentially a recap because why? This was a this was a tug of war last week, and the Tigers lost the tug of war right there. They lost the tug of war back here on August on 8/10. The alphas are still in the trade, and they are a little bit sideways action right there. We had the closes here, the closes there. This is a little bit of sideways action, but remember I told you about the stochastics turnaround zone right there. There is danger right in this zone. Now I'm going to stick to my rules because anything can happen. But what I'm going to impress upon the viewers here, that if you are not comfortable when price enters into this lower zone, then you can look for another established exit. The thing is, you have to establish that rule, and the main rule of that rule is consistency. If you start chasing too many exit rules and do not consistent with the chase rules, you're going to be chasing a rabbit from here to doomsday, and the end result is you'll end up bleeding your account. And even one of my instructors Darren Kimoto. He he brought this up to my attention when I was studying under at OTA. So yes, I am a seminar junkie with 12 trade schools under my belt since 2013. All right, let's close that off and let's go off now to the Tigers. And here at the Tigers, we saw XLE already. So UAA is the only thing left for the Tigers going for it. And it's got a real strange pattern here. Look at this. This is a real, you don't see these kind of dojis very often. Look at that. A little bit of a no tail to the bottom, a lot of pressure to the top to the sell side. So, but look at this. Remember, we are now in this turnaround zone. This doji very well can turn around, and this call can possibility have opportunity of being rescued. Why? Because this expiration not till January. I can hang out here as far as November or December if it doesn't, long as it doesn't touch that third rail, we're good. And that's the thing about price channel. So with that said, we are going to conclude today's report of losers become winners with XLV in leading position for the alphas at 17%. And I thank you very much for checking it out. Bye bye.